Good evening and welcome to the Weekend Edition. My name is Peter Rezicek from ShadowTrader.net. New all-time highs in the markets this week, but most importantly, not just in the S&P, but in the NASDAQ 100, which finally played a little bit of catch-up and gave us a very bullish signal early in the week. I'm also going to be teaching you about some market-generated information nuances that are going to get you into the market on the right side, but also keep you there once you are in. I've also got about 5 new segments for this show, one of which I'm going to be debuting today called Trade Ideas. All of that and much, much more in today's Weekend Edition. Let's kick things off right here a little bit differently from how we usually start on the show. We usually go straight to the charts with the what's really going on section, but I thought this would set the tone a little bit, talking about the alert of the week here, because it deals with what I've been discussing on this program for a number of weeks, which is the relative weakness of the NASDAQ 100 as opposed to the S&P 500, and that really changed a little bit this week on December 2nd, which was Monday. And I want to show you this alert right here. This is actually something that I posted on Twitter. You can check it out at the Chiron down below if you want to follow me on Twitter. But regardless, these are all the types of things that I'm talking about in real time in the weekly options room. And on Twitter on December 2nd, I said specifically, pay attention to the relative strength in the NASDAQ today. We haven't seen this for a while. That is how a rotational market stays up and doesn't fall and confounds those who think that fundamentals and economy backdrop is bearish. And we've certainly had a lot of that out there. You feel people, especially on socials, talking about not understanding this rally and talking a little bit bearish. And exactly this is happening. It's definitely confounding the bears, and it just keeps going higher. So let's take a quick look at the chart just so we can see from a technical basis that December 2nd move. This was the relative weakness here in the NASDAQ that we've been talking about, meaning that we had just been kind of stuck in this slow grind. If you recall, over the last few weeks, we've been talking about the same thing on the show. And finally, right here, which is the December 2nd candle, is where we played catch up. On that particular day, the S&P was much relatively weaker to the NASDAQ, and the NASDAQ 100 did what? Went to a new all-time high, which is something that we hadn't seen in a while. So from a chart basis, this really was the catalyst, I felt, that set up the rest of the rally of the rest of the week, because that NASDAQ 100 was now no longer acting as a drag on the rest of the market, okay? Now, that being said, let's step forward a little bit together into the later part of the week, talking about like Tuesday and Wednesday, and I want to show you some other alerts that I actually sent. This right here is an alert that I also put out on Twitter, and I wanted to start with it specifically because this probably had more engagement from everybody out there than any other tweet I've sent out, or at least any tweets I've sent out in recent memory. A lot of people really took notice of this, and they were commenting, and people seemed to like what it was all about. And so I wanted to spend a little bit of time in the program talking about it specifically. So let's just break this down for a second. This is only a snapshot of market profile that just shows 2 days. You can see this is Monday and Tuesday, and as we were just discussing and showing on the charts, Monday was the day that the NASDAQ 100 went up to the new all-time high, playing that catch-up move, so to speak. And then the market did move higher for the rest of the week on Tuesday, Wednesday, Thursday, and Friday, as we know, right? So what we have here is a snapshot of the market profile, RTH sessions of the ES from Monday and Tuesday. And there's a couple of interesting points here, actually 3 points here that I want to talk about. And this ties in with what I talked about earlier in the program in the introduction, where I was saying, I want to share information with you that is going to get you into the market on the right side of it, because if you've got the bias right, everything else kind of falls into place. Remember, 85 to 90% of stocks are going to follow the broad market. So if you've got the tone and the tempo, and most importantly, the direction right, you're really about halfway there towards profitability, if not 3/4 of the way there. I'm a huge believer that everything has to follow the broad market. I mean, every single trade I do in my weekly options room, every single trade I do in my own accounts, always following the broad market. If the S&P is trending higher, I'm not doing any shorts. If the S&P is coming down, I'm not doing any longs. That's basically the way I've always been operating, and it's helped me a lot over the years because I've always got the sort of proverbial wind at my back from whatever the broad market is doing. So on a more granular note, looking at these 2 days here, the 3 points, let's just start with number 1. This is what we call a poor low, okay? A poor low means that there's no excess on the low, and the auction here didn't finished properly. It doesn't have an excess low. An excess low, if you can imagine, would be all these letters with a bunch of letters coming down to the bottom, like single prints, very, very skinny. And what it is sometimes people call it a buying tail. Just basically means that the down auction ended properly. And what you want to do when you see that data is you carry it forward, because that should be repaired, meaning that notice on Tuesday, it did actually repair. You went below that poor low and you added on some of the excess that should have been here. You can also almost imagine that if you had like a scissors and tape or whatever, you could cut off this little part here from the bottom and paste it onto Monday, and that would sort of complete the auction, right? So what you do when you're analyzing the profile and using this data every single day is you create a narrative, and you have all these different data points, and you carry this narrative forward from day after day. So think about it. On Monday, you had a poor low that should have been repaired. You come into Tuesday, and what happens? The early session here, you can see the letters if you zoom in, it's C, D, E, F. The profile starts with B. So the first 30 minutes of the day, the ES is plotting letter B, then letter C, and so on onwards. Look at these letters here. It's obviously early in the day. It's C period, which is the second period, 10 a.m. Eastern to 10:30, D period and E period and F period, right? The market actually makes a new low on Tuesday, but do you really get acceptance? Like, do you see the signal here, how much of a long signal this is, where the fact that the market does spend a little bit of time here, time equals acceptance, except, that equals value, right? Price plus time spent equals value, but look at the rejection. Right? That's the thing. Like, how much time did you actually spend there? Not all that much. But every time that you did spend time there, what happened? Rejected back higher. Look at the C period all the way up here, D period all the way up here, E period, etc. Rejected back higher. So that's the first point right there. It's all about not what the market does, but what the market fails to do. And if the sellers were stronger, it wouldn't look like this. It would be much more acceptance below, and it wouldn't constantly reject back up, right? Let's go to point number 2. Point number 2 is the other extreme, which is also a poor high. This was a poor low, this is a poor high. RTH high, poor high. What has to happen? The poor high needs to be repaired, just like this was repaired. So I already know after Monday prints right here, I already know that the auction is not over. And we're going to talk about this a little bit more as we get deeper into the program. You can see there's another example of this from today, which is Friday, December 6th. But let's just go back to this Monday. We know we have a poor high right here, and it needs to be repaired. So in my mind, I'm adding that onto my narrative, carrying those data points forward, and I know that this up auction isn't really over because that needs to be repaired. So that's also another bullish signal. Thirdly, I circled this area right here because it is the point of control. The point of control is just a fancy term for saying what is the fairest price to do business. And what's the fairest price to do business? Always the price level where the most volume transacted or the most time was spent. I like to use volume for my TPOs, or for my POCs rather. So I know that here 27,000 contracts traded here on Monday, and here at almost the identical same level, 19,000 contracts traded. So this also gives me a lot of information after Tuesday telling me that the market is probably going higher on Wednesday, Thursday, and Friday. And why is that? Simply, the market is obviously overbought already. It's very, very strong. Even just coming into Monday, we had already been up 8 sessions or whatever, right? And yet, the fairest price to do business, which is the point of control here, is where in the range on Monday? Pretty high. Close to the top, not all the way up there, but let's just say in the upper third. Then comes Tuesday, and what happens? We have the fake out on the low, we take out the low, but we constantly reject back higher. And not only do we reject back higher, but we print a back-to-back point of control at the exact same area. So do you see how all of this kind of builds the narrative of bullishness, that if this was already overbought and the market's already pretty high, and you would think would want some correction, obviously there's all these probably naysayers or bears or people who are just dying to short the break here of the prior day's low, and they do, but it doesn't go anywhere for them, and yet the point of control here prints back to back at the high level. So you see, this is the market generated information that gives us so much help in telling us what the bias is going to be, and what we can expect from the market going forward. This is speaking to us as of Monday and Tuesday, loud and clear, that A, the auction isn't over, and B, we should expect to see higher prices into the end of the week. Firstly, to repair that poor high, and then we just take it from there and sort of monitor for continuation and see how the market goes. And we all know how that turned out, in that Wednesday, Thursday, and Friday all made higher highs and finished the market much, much higher. Obviously, as you can see, I'm extremely passionate about this type of analysis. And if you don't have access to the market profile, the next best thing you can do is to subscribe to my morning report, which is Peter's Pre-Market Perspective. I break down all of this market profile data for you 30 minutes before the open. And more importantly, I do it also in a short 3 to 5 minute video, which explains everything that comes out every single day. I've always said that the Pre-Market Perspective is kind of like the Shadow Trader gateway drug, so to speak, because it really gets you in the door at an extremely cheap price. I put this out for 20 bucks a month, and all of our advisory rooms, which is the live trading suite that includes the stocks and options room and the futures room, and of course my room, the weekly options room, all of that does include the Peter's Pre-Market Perspective. So any advisory that you have with us, you always get a complimentary subscription to my morning report. Now, how am I using this information this particular week to make money in the markets? I want to just take a quick look over here at the blotter from the weekly options room. I'm not going to be breaking down and analyzing a bunch of winning trades today. What I more wanted to talk about just for a moment is what you're not seeing in the report here today over the last week. And what you're not seeing is trades in real estate, energy, or JP Morgan. And I hope that should ring a bell for you, because those are the things I talked about last week and in recent videos. So this is just kind of to sort of explain to everybody and remind everyone that if you want to get the general overview of what's going on in the markets and a recap of last week and how I'm feeling about the next week, continue to watch these videos. But if you want more than that and you want to trade with me live in real time, follow all of these winning trades with me and my subscribers in real time as they're happening, hit the Chiron down below, which is shadowtrader.net/options. And now is, of course, the best time to be doing this because we are having the special Cyber Monday sale. This is probably going to be going on for a little bit longer. This is going to get you into any of those rooms at a deep discount, so I highly recommend it. 30% off of all of our trading rooms, mine included. So that's Live Trading Suite or Weekly Options Room, and also all of the indicators and scripts on our site. Those are 20% off, and you can see the coupon codes are here. Advisory 30 for the rooms and script 20 for the indicators, right? So hope to see you there at shadowtrader.net. And one last thing on the profile, since the point of this show is always that I want to be looking forward just as much as I'm looking back, preferably looking forward a little bit more than looking back. This is the market profile from today, December 6th. And since I've already taught you about poor highs and poor lows earlier in the program, something should jump out at you right away. If you don't see it, I've of course circled it. The high is poor and the low is poor. Let's just focus on the poor high for now. We talked about that in the previous graphic earlier, talking about how that tipped us off, that Monday needed to be repaired to push higher. Well, guess what? If you think this rally is over, guess again, because we have another poor high here on Friday, December 6th, that also needs to be repaired. Basically, the data that you want to carry forward for now is that the up auction has not ended properly as of yet. So that means that, sure, could there be a little bit of pullback between now and the new high? Certainly, but you want to carry this forward in your narrative in that the auction hasn't ended properly, and you're probably going to have some sort of an excess high there before this auction is over. Now, that being said, the low is poor as well, but remember, that can give you multiple different types of information. We saw that poor low on Monday that needed to get repaired, and then it got rejected again. So could you make the same argument that prices should actually also go lower because this poor low needs to be repaired? Certainly, but remember, if it does, you're also going to be given a lot of market generated information in the way that it does it. What's going to be the tone? What's going to be the tempo? How much acceptance are you going to get below that range? Will this value area actually move lower, or will it be unchanged? And then, of course, what if it doesn't happen at all? Right? That's the ultimate sort of rejection of that, is that you will then carry forward this poor low in your narrative and just leave it there in your narrative. But if we move higher next week, say Monday, Tuesday, Wednesday, and we don't repair it at all, once again, it's a bullish signal, because as I always say, it's all about what doesn't happen, right? We call that WWSHD in the markets, when what should happen doesn't. So if that poor low doesn't get repaired at all in early trade next week, market's probably heading higher once again. Time now to take a quick technical look at the major averages, as we always do in this show. I call it what's really going on because it really is what's really going on. And this week I actually want to start with the Russell. Some people have commented on these videos in the past saying, why don't you ever talk about the Russell? Well, I'm about to show you exactly why I never really talk about the Russell, because this is the daily chart of the Russell. And right off the bat, you should see how different it looks to the S&P and the NASDAQ. Look at this move right here, which was a breakout, big body candle. And then pause, a little bit of an advance, and within a few sessions, 100% retracement. Once again, the S&P doesn't look like this, and the NASDAQ doesn't look like this. And we see it again here, where you have 100%, then it 100% retraces. But look at what's happened recently. We know what the S&P and the NASDAQ have been doing over the last 8-10 sessions. What has the Russell been doing over the last 8-10 sessions? Nothing. It's been slowly just falling down and grinding lower. So if you ever want the answer to the question of why I'm really not interested in small caps, this is the reason. There's just nothing there. Moving on to the biggest benchmark, of course, the S&P 500. This to me is the most important chart, and I believe it is always the starting point of all TA. Remember, you want to do everything in the markets top down. We call that analysis, and top down simply means you start with the broadest index here and work your way down. You could even say that you also want to start with larger time frames, meaning start with a monthly chart, work your way down to weekly, work your way to a daily. For purposes of brevity, I usually just do dailies on this particular program, and the daily S&P just looks very bullish. Obviously, we just talked about how that Wednesday, Thursday, Friday made higher highs each time. Monday and Tuesday, these were the 2 days that we talked about in the profile on the other screen. Not a whole lot to talk about when the market is trending this nicely, other than the fact that, just pay attention to where your 8 EMA is, where your 21 EMA is, and there's really no potential for change. And remember, when we use the word change, we mean a change in tone or a change in bias. There's no real potential for change unless at the very least that 8 EMA gets taken out, and we're not even close to it. So just pay attention to how that 8 EMA sort of rises and comes into conjunction with price. But again, unless we take it out, no change here. Market should be moving higher. Last but certainly not least, NASDAQ 100. We talked about it a lot in this particular program, talking about the relative strength and the breakout. Look at the expansion of range here. Monday was the day in question that we talked about, the December 2nd day with the big body candle pushing up to make the new all-time high. But look at the expansion range here. Then you moved up, nice gap, and again, look at Wednesday, Thursday, Friday, especially Friday. I'm an extremely big body candle, and this is what I was talking about earlier in the show, and we've alluded to this in previous shows going back like at least a month and a half now, talking about what's going to happen if the NASDAQ 100 ever regains the mantle of relative strength in the sort of battle between NASDAQ 100 and the S&P, and basically this is what happens. You get a market that's going to move markedly higher as we're seeing flows out of financials, discretionary, industrials, etc., and more into technology, and it's just pushing this NASDAQ 100 higher. Obviously, the 821 situation that we just talked about in the S&P, it's the same, a little bit overextended now from the 8, so be aware of that. But again, where would there be any potential for change? Only if we had some sort of a daily close below the 8, and it doesn't seem like we're anywhere near that at this particular junction. In the interest of sharing more actionable content with you, we have a new segment today called Trade Ideas. Usually we have a segment towards the end of the program called Number One Draft Pick. I'm still going to be doing that. That's where I just show you one idea, which I feel is the best, but I wanted to expand that a little bit for the program and call it Trade Ideas, where we have multiple. So you can see here as the graphic changes, we've got 3 different ones today going on, which is going to be John Deere, Tesla, and FTAI Aviation. So let's move over to the big chart and talk about the first one, which is John Deere, and why I believe it is in play soon. This chart has a lot going for it to get excited about, I think. Firstly, let's start from the breakout candle right here. Notice the increase in volume on the breakout candle, right? Moves up. Classic rally up here, which then starts to tail off. And then the question is, where do you buy this? Well, there was a buy here on the 8 EMA, but that then failed, so there could have been a little bit of money to be made. But I think the bigger buy is going to happen at the 21 because it is also in conjunction with the anchored VWAP. We touched upon this concept a little bit in recent programs. It's something that I'm bringing into my analysis more and more. And if you anchor the volume weighted average price from the low here, which is how I believe it should always be done, back from the prior swing low where the rally began. If we start the anchored VWAP from there, notice the blue dots here where it ties in right at the 21. So I'm looking at a buy here right around that 435 area in John Deere when the price meets that anchored VWAP and that 21 period exponential moving average. Next up is a name you should be familiar with, of course, Tesla, Tango Sierra Lima Alpha. Big advance today, moving up. I'm basically just looking for a move here to the 400 level, which is a key, obviously big round number that I think markets like to move towards, but also there's this prior resistance. You don't see it on the chart here, but if you pull out to a monthly chart, you'll see that the all-time high here is around the 414.50. I shouldn't say around, it's exactly that, 414.50. So that also could be a target. I am long this currently in the weekly options room. We've got a 132 on, which may prove to be the wrong spread, but we're not going to lose any money because we structured it specifically in a manner that we don't have upside risk. So even though right now I'm short 3 calls at 400, I'm also long calls at 380, and I'm long calls again at 410 in that structure of 132 like that. So if you do the math, obviously if I'm long at 80 and short 3 times at 400, but I've got 2 longs at 410 covering it, I can't really lose any money if it breaks on through other than the debit I paid. So I'm going to be watching this very closely to see how it reacts next week, coming to that 400. If I need to close my spread at a small profit, which I will, obviously, since it was a debit spread, it's going to certainly expand in value, although I may not be getting that max value at 400 if the stock is there sooner rather than later. If that happens, I'm going to just basically start to shift my focus to that 415 level, probably put on some different spreads on Monday or Tuesday, targeting that, looking for that all-time high test, again, at around 414.50. Here's a name that some of you may be familiar with if you are fans of IBD, as I am. Of course, that's Investors Business Daily, and more specifically, something called the IBD 50 that comes out every week, which is their 50 top-rated fundamental stocks on a number of different metrics, but mostly looking at earnings growth, sales growth, and things like that, because they're looking for companies that are growing very, very quickly. And within that list, clocking in at number 41 this week is this stock here, which is FTAI, Foxtrot Tango Alpha India, also known as FTAI Aviation. This has a lot going for it. You can see it's in a nice uptrend to the upside. I've drawn a trend line here from the August lows, bringing the stock a bit higher. And right now, we're pulling in a bit, which is really great for stocks like this that IBD likes. If you ever get a pullback in any stock on the IBD 50 list, you have very, very high odds of making some money in it, on a pullback in the name. But regardless, let's just look at this pullback for a second, because we've lost the 8 here, right? And we've actually lost the 21. And here's where things get a little bit dicey, because the blue dots here of these little squares, that's the volume weighted average price. That's the anchored VWAP here from here, right, from this low right here. So that anchored VWAP is right here from about Halloween or so. This is kind of the end of October. And what I think is noteworthy is that today's price action actually took out that AVWAP just by a little bit. So I'm going to be watching this very closely. I think over today's high is a buy. Remember, these VWAPs sometimes can be a bit elastic. Sometimes they touch right to the exact price and then turn, but they can be a little bit elastic. So let's watch this early next week to see if that's indeed elastic. If so, that means that the stock is basically a buy over today's high. Or if not, then it tells us that the AVWAP is not going to be the technical catalyst that we were looking for. More importantly, it means that the uptrend line is probably going to be in play, and the stock could float down lower, probably to about this $150 area, whereupon it also would be a buy in conjunction with touching that uptrend there in FTAI. I wanted to just end the program today on a little bit of a fundamental take, because I think I would be remiss if I didn't mention the following data to you, because it is kind of interesting and it does bode well for what's going on in the future. Of course, that's a whole part of the program, or I should say the whole point of the program. And what I wanted to talk about specifically is this piece of information right here, which came out today, which is the unemployment rate. And I also wanted to mention it because it was something that I mentioned many, many times on this show, saying that it could be a precursor to a potential recession if this number rose off of that 4.1 level, but that never happened, right? We know that we started talking about that here in the summer months here, right? And since then, it actually ticked down instead of up. And we had back-to-back months here of 4.1. And today, on Friday, December 6th, we got a new read, which ticked up to 4.2. And that's really not enough for the Fed to change their tone. And what it actually did is gave the Fed cover, so to speak, to stay on the path they're on, and more importantly, lower interest rates at the meeting that's going to happen on December 18th of this month. And if we look at this next graphic, it really shows you very clearly where the Fed is at and what the expectations for that move are. You can see right now the current rate is 4.5 to 4.75, but look at the percentage odds of ticking down by 25 basis points, right? It's right here. It's an 85% chance now that the Fed is going to actually lower by a quarter point in mid-December, only a 15% chance that they stay the same. But more importantly, look at the trend of how the Fed funds futures have been acting in terms of getting us to that 85% mark, right? 1 month ago, it was a 70% chance. A week ago, it was 66. Yesterday, it was 71. And then this morning, as we got that economic data and that unemployment report, we're up here to 85. So as you can see, the trend is that it's basically more and more and continually higher probability that the market's essentially going to get what it is expecting. And that in and of itself is the most important thing, I think, to keep this rally going, because remember, the market feeds on basically getting what it wants. It's a discounting mechanism that is going to price in what it thinks is going to happen in the future. And when data like this comes out that confirms that it, quote unquote, so to speak, is going to be getting what it wants, the market is much more comfortable. Remember, the number one thing that the market does not like is uncertainty, which basically means not knowing what's coming in the future. But this data basically points in the other direction, telling us that that quarter point cut is looking more and more baked in. Market should like it. And once again, I do think we should see higher prices into the end of the year. To recap a lot of what we discussed in this program, market continues higher, and it's really a lot about what the market is doing with buyers in control, but even more so, what is the market not doing, right? We talked a lot about those nuances in this show about looking for those clues. Let the market speak to you, especially through the market profile of the things that are not happening that you think maybe should be happening as far as sellers getting engaged. And those are oftentimes the strongest signals in the market, is just paying attention to what the market is not doing, all right? Remember, if you want to follow all this stuff in real time, either with myself or my team, now is the best time to do it, because we've got that 30% off sale on all our trading rooms. Link is down in the Chiron below, all right? Remember to hit that like and subscribe button, and also the little bell to get notified whenever ShadowTrader.net posts videos. That, of course, all helps the channel. As always, coming at you from beautiful Los Angeles, California, I wish you good trading. I'll see you next week, and good night.